So the big picture view of the budget, what's in there that what's not in there but we can read into it. Two wise men from different areas of life join me tonight. Before I do that, I should just mention that Newswires are pointing out that Warren Buffett has been warning of inflation ahead, by the way. Apparently, he's concerned at the governments around the world that are simply printing money, which he says is implementing inflationary policy. Quote, governments are printing money everywhere, borrowing stupendous amounts. Throughout history that has led to problems, and it will this time too. Well, I know one of my guests here is a particular fan of Mr. Buffett, so let me introduce them. Chris Leithner, financier and investor from Leithner and Associates. Chris, thanks for coming in.
Oh, thank you, Steve.
Just give me your sort of gut reaction to the budget last night.
Well, the
one that everyone was underwhelmed by. They were watching, TV and other things.
The basic point, it seems to me, is that the Australian government is doing much the same thing as other Western governments. Basically, their policies premised upon two fallacies. One is that they can spend their way out of tough times.
The wisdom of crowds, Chris Leithner. They're doing it, so I'll do it.
Or lemmings falling off a cliff. Take your pick about the analogy. And the second one is that by intervening in markets for credit, that's to say depressing rates of interest below a market clearing level, they can prop up asset prices. The Americans are doing this. It's happening in Britain, and now it's happening here in Australia. So in slightly political terms, there are basically two parties in this country. There's a stupid party. I'll leave it to you to decide which one that is. There's an evil party. Decide which one that is. They occasionally...
Well, we've got a choice of evil or stupid.
These days, they do things that are simultaneously stupid and evil. This is what we call bipartisanship. So that the arguments about the budget are simply Clayton's arguments that all and sundry in Australia agree about, more has to be spent. It's not about pulling belts back. It's about consuming and borrowing. It's not about saving and producing. Where shall we intervene? You say tomato, I say tomato. Some people say stimulus. I say pork barreling. Where will the pork barreling, will it be in this electorate or in that electorate? In other words, these are arguments which are based upon basically fallacies. They're run by economic illiterates.
Well, I'll come to those.
And the sum total, I emphatically agree, will be these are policies which are going to place upward pressure on interest rates and strongly upward pressure on headline rates of inflation.
I love getting you in. Chris Leithner, the big picture economic view. You've been warning for some time about governments printing money around the world. In fact, you've been not even lamenting, you've been denouncing them, saying that just simply printing money is absolute nonsense, that this is madness, that you think that people should, follow the rules of their grandmother, if you like, reduce your debt, save your money, build your asset base, as it were. How do you see the big picture view of the budget, what it means?
Well, unfortunately, not that much, just in terms of what's just been said. That's to say, the government had a chance, if it chose to take it, to say to people, look, the policies, to a considerable extent over the past 10 or 15 years, based upon debt, based upon consumption, have been erroneous. They've got us into this hole. It's now incumbent upon individuals, not the government, to dig themselves out of this hole. What does that mean? In an economic sense, it comes close to meaning cold turkey. But, of course, none of that has entered any heads in Canberra of any political persuasion. In other words, very hard choices are coming, whether people like it or not.
This wasn't the hard choice budget, was it? They said it was going to be a tough, hard budget. It just wasn't the hard choice budget. It was the cream puff budget, as Chris Richardson said.
There haven't been, if you like, hard decisions taken, I'll go out on a limb, since Peter Walsh made them in the early 1980s. In other words, a politician who looks someone straight in the eye and says no, and possibly adds a few unutterable things.
But he's saying more than no.
I can't say that on the radio.
I'm here to tell you.
Precisely right. And this government doesn't have the equivalent of a Peter Walsh. The Liberal Party doesn't have the equivalent of a Peter Walsh. Someone who says, look, there is such a thing as fiscal rectitude. It hasn't been practiced in this country for quite a long time. People have forgotten all about it. Politicians simply haven't been around that block, and so they're simply stunned by these sorts of developments. They're reacting to them. They have no real response.
All right. Now you've looked at the big picture of the major nations like Australia, Canada, France, Germany, Italy, etc. The G20, I guess, courtesy of IMF data. What do you see in terms of debt? How much debt are these countries carrying, Australia included?
The borrowing requirement is on the order of $11 trillion US. That's, if you like, to bail out banks and financial institutions. It's not for other stimulus sorts of projects. In other words, there is an absolutely mammoth borrowing requirement headed the world's way. What does that do? It basically says to people who have savings, here comes a tidal wave. The only way that people will eventually buy that amount of debt is to insist upon better terms. And what are the better terms? They include higher rates of interest. So in other words, even if not a single dollar were to be borrowed in Australia, and now the benchmark seems to be closer to $300 billion than it is to the current borrowing limit of $200 billion, simply because so many other countries in the world are borrowing so massively, that puts upward pressure upon rates. That eventually, just as has been said, it'll put upward pressure upon mortgage rates, it'll put upward pressure upon the rates businesses have to pay. All of that implies asset prices are not going to continue to skyrocket as they have in the stock exchange, that they stagnate or fall. It implies then, whether we like it or not, and most people won't like it, that belts are going to be tightened quite significantly. In other words, if we think about in cricketing terms, we're barely at drinks on the first day of a 5-day test. In other words, for someone who says, the worst is past, it seems to me that's
nonsense.
Precisely right.
The Commonwealth's financial or fiscal position, which I hate that word, is deteriorating rapidly. How rapidly?
On the order of the debt, if you like, debt position as a percentage of the economic pie, going from the current, say, 6-ish% to on the order of 15%, according to some very favourable projections outlined yesterday. Assume that the bad news is always underestimated, so push that towards, say, 20 into the low 20s. But again, I'm simply extrapolating there. I'm simply saying that, what's regarded as bad news could be considerably worse than that. Remember, Australian individuals and families and businesses are heavily indebted. Yes, it's true that the government is less indebted than, say, the US government, the British government, and so on. Sure. But Australians as individuals are among the Western world's most heavily debt-laden people. So that when one talks about interest rates rising, a given percentage change has a much bigger bad impact today than it would have, say, in the days of 15 or 17% mortgage rates.
All right, now John's point is that people aren't listening to this budget. Mr. John and Mary Citizen couldn't care less. They're too busy watching the horror of rugby league football and other things and good television shows. But do you agree that inflation pressures halfway through next year?
I agree that inflation has been raging for quite a long time in terms of what central banks are doing, pumping up their balance sheets, basically increasing the supply of money. The consequence of that inflation in terms of rises of particular prices, rises of interest rates, that's coming. I can't give you precise date at which it arrives, but certainly that's the risk. And notice then the combination of these two things, the stagnation that comes with unemployment, etc., plus the consequences of inflation. That's a rewrite, not of the 1930s, which is the good news, but the bad news, it's a rerun of the 1970s. And remember, the 1970s recessions, plural, and early 1980s, it was not the case that, oh yes, there was a bit of economic bad times for 3 or 6 months and we put it behind us. No, it was a hard slog for the better part of a decade.
A question without notice. Have you checked to see what the financial markets were doing today? How do investors respond? Or have you looked?
The short answer is a low-key response, both with respect to credit markets and stock markets. But the basic point, I think, is a very good one. That's to say, or the point that's just been made. It's ultimately savings which is going to dig people out of the hole in which either they have dug themselves or may dig themselves. Things like savings, things like production. It's not digging oneself further into debt. Much greater vigilance against politicians and basically a sense of prudence, something that has gone out of fashion, has been alien to people for the better part of a generation.
Chris Leithner from Leithner and Associates. Chris, thanks to you as well.
Thank you.
And a cyclone warning.